Oh, baby, the drama's back, and this drama ain't for your mama. Stock market madness, baby. Dow sinking off a cliff. NASDAQ down 3+% here today. Russell 2000 tanking. Worst day since 2020 for the Russell 2000. Volatility spiking to crazy levels. A lot of people very upset with Jerome Powell here today. I saw it out there. A lot of people are mad at him. They want him fired. They can't believe it. You know, a lot of those people are people that are very short term in the market, people that are riding call options, people that are margined out to insane levels. Those people are in trouble. They're in big trouble, okay? Other people are happy. They're like, thank you, Mr. Jerome Powell, for what you did here today. We've been waiting for some drama in this market. We've been waiting to buy stocks for cheaper prices. Like, please continue this on, right? So you got two divergence groups out there, right? Look at this. If you didn't know, the market had been showing some signs of weakness going into today. Today was just obviously an off the cliff, day, but there had actually been some weakness heading into this. Check this out. The Dow went down 10 days in a row. 10 days in a row now, right? So we've had weakness. It just hasn't really been talked about because like Tesla keeps going up every day and Palantir and those sorts of stocks, right? And Bitcoin had been doing really well. But the reality was there was a lot of weakness beneath the surface. And maybe some people knew something was going to happen here, right? The first time this has happened since 1974. Do you know how bad of a year it was in 1974 in the stock market? S&P 500 went down around 30%. That's a huge number. That's literally one of the worst years in the history of the S&P 500 in 1974 to be down around 30%. Horrible year. So anytime you have anything in relation to 1974, no bueno. Now, if you have any hedges on the market, if you have any put options on this market, you probably were printing money today, right? Toll Brothers hedge. Oh my gosh. Like what a day. What a day, right? Couple subjects I want to speak about here today. One is we're going to talk about, is this just going to be a couple day phenomenon here where market just goes down, there's some weakness, and we just come roaring right back like nothing ever happened, right? Or is this going to be more of a sustained several month down cycle we're in now at this point in time? So we're going to discuss that at the front of this video, and I'll tell you what I believe is how this is going to play out, okay? Second thing is we're going to talk about some stocks I bought. I was actively buying there right before the market closed. I made several moves, and I'm going to run you through what moves I made out there here today, okay? I hope you guys enjoy this video. I canceled plans for y'all to do this video here today. I wasn't even planning on making a video for the main channel here today, but given the drama, I'm like, I know there's going to be a lot of people that want my 2 cents on what happened here today, if this is, the end of the market, this and that. So I'm like, let me do this. All I ask from you guys is one thing only. It's for you to smash that like button. If you want to be here or subscribe to the channel, you can do so. We just hit a new all-time high subscribers in the history of this channel. Additionally, if you're looking to access all my best course curriculums, if you're ready to take investing serious and actually be able to take advantage of these opportunities you get in the market when we got drama that we're going to have here for a bit of time, right? If you want to take investing serious, apply to join private stock group, pin comment down there. You get access to all my best course curriculums, Discord chat, all that good stuff, okay? Alrighty, where I want to start out is this. This is very important. So, it was 2 days ago, 48 hours ago, I released a video on this channel, here on the main channel, right? It was called My New Warning to All Stock Market Investors They're About to Flip. And in that video, it was a very in-depth, 44-minute video, right? I kind of ran you through all the different scenarios that we're likely looking at here, right? And I was telling you how sentiments can change so quickly in regards to the market, right? And that was one of the points I kept bringing up throughout the video is sentiment changes really quickly. People think all this stuff just lasts forever, this kind of euphoria feeling. And I'm like, man, it can change so fast. And what did we see here today? Oh my gosh, did people change their sentiment rapidly? Right? Tesla was green earlier in the trading day. And all of a sudden, magically, everybody changed their opinion on Tesla. And we're just dumping this stock nonstop. The stock, by the end of the trading day, ended up not only being red, after it was green earlier, right? It finished over -8%. People were just couldn't wait to sell their Tesla shares in that last couple hours of trading. It was just an onslaught of selling, right? And so, I'm down to my last 3,100% gain in this stock now. It's getting ugly, right? But that's how fast it switches, right? Really, one day to the next. It's not even one day to the next, a few hours to a few hours. And suddenly people are like, oh my gosh, I don't want Tesla stock now. Like before they could run over everybody to buy Tesla stock. And now it's like, oh, just sell, sell, sell. Obviously you see what's going on out there. BTC down, 5,800 and made that move quick. It's trying to hold on to 100K. We'll see if it's able to do that, right? And there's a great saying in regards to financial markets. I'm not sure if you guys ever heard this one before or not. If you've been in the market for any substantial amount of time, I'm sure you heard this. The markets take the stairs up and the elevator down. And when things switch negative, it switches really quick. Sentiment changes. And the crazy thing is, a day like today, it's only one major down day, right? If you all of a sudden get several down days, watch how quick people are going to turn extremely bearish. Like it will happen fast. I had CNBC on much of the day here today, right? To obviously watch Jerome Powell. Plus I usually just have it on in the background anyways. And I'm listening to a lot of these people and I'm like, dang, man, like I swear these are the same people that like they seem so bullish and like market's just going to go to euphoria forever. And I'm like, geez, now they turn so bearish so quickly on the whole market. I was like, wow, that was a fascinating kind of switch there, right? And that could be just in a matter of a few days versus another few days. So you got to understand, when people start getting scared, they change their feelings very quickly. And you'll have these Wall Street funds be willing to buy Tesla at any price. It doesn't matter if Tesla's at $10 trillion. They'd be running over themselves by $10 trillion if that has the momentum. They don't care about fundamentals. They don't care about robo-taxi network. They don't care about robots. They don't care about any of that crap. And remember, Tesla's not driven by retail investors. It hasn't been driven by retail investors for, honestly, 5 years now. That's a stock that's handled sell-offs and the up moves by Wall Street now. They're the only ones big enough with enough money to push Tesla stock around, right? So those folks, like, they'll keep running. Like, as long as Tesla's got momentum, they'll buy that stock left and right. It has nothing to do with the fundamentals of the company. They'll just buy. On the flip side, if they don't want Tesla, they'll dump that stock so fast it's not even funny, right? 8% here today in one day when it was like that's how quick it switches, right? They'll pump Bitcoin to whatever price, but as soon as they get any bit negative, oh my gosh, the sentiment magically changes. It's like, Bitcoin's the next gold, and then all of a sudden, sentiment turns the other way a little bit, and all of a sudden it's like, oh, Bitcoin's a speculative asset. It's crazy. Like it's fascinating, man. And it's not like this is new. This isn't a new phenomenon. This has been the way it's been. This is the way it was way before I got in the stock market 16 years ago, and this is still the way it is today. People change their sentiment very, very quickly, right? Now, check this out. Shocking move for the VIX. VIX up like 77% here. What? I'll tell you what, though. We were due. Obviously, there was a lot of euphoria in the market. There was a lot of just like specifically, I remember reading a comment yesterday on a YouTube video. If you guys don't think I read comments, I still read a lot of comments. Like, obviously, like it's too much to read them all, but I still read a good amount of comments, right? And I read this one comment yesterday, and this guy's like, oh, who cares to hedge? You need to be all in this market. And just like seeing a comment like that yesterday was just like somebody like that just needs to get slapped in the face. Like what am I going to say? Just like that type of approach, like, oh, who cares to hedge? Like, you need to just be all in this market, man. I'm the smartest guy. Like it's just like, come on. What are we doing here? Right. And that's the sort of sentiment we had recently in this market. And when I say recently, I'm really talking over the past few weeks. A lot of this has transpired. We've been in a bull market now for just over 2 years, but this sort of euphoric sentiment really has taken off in the last few weeks, I feel like, in kind of this approach of like, who cares to hedge? Who cares about cash? Who cares about anything? Just own what's going up, right? Whatever's going up, whatever's the hot stock, whatever's the hype, that's what it is, right? Whether it's Bitcoin or Tesla or Palantir or whatever it is. And I'm just like, ooh, boy, like we've completely diverged now from like the fundamentals of companies, right? Into this thought process around like just it's the hype, man. Like even I look at a lot of the people that have been buying Bitcoin recently. A lot of these people aren't even like bullish on Bitcoin. Like in terms of like understanding what Bitcoin is, its history, those sorts of things. I've been watching this. Same thing with Tesla. I'm looking at a lot of these people. I'm like, I don't even think they really understand Tesla's business model. I don't think they really understand how the robo-taxi network's going to work. I don't think they even understand that it's going to be a several year cycle of trying to ramp that and losing money. They're under the assumption Tesla's just going to make money right from the go, and it's just going to be like billions of dollars. And I'm like, dude, you've never built a business before, and you have no clue how these tech companies work. You know what's going to happen in the robo-taxi network? It's going to be years of likely losses. They're going to be competing against market share, against Waymo and whoever else wants to compete. Everybody's going to want the big piece of pie. So you know what they're going to do? They're going to undercut and undercut. And it's going to be a race to bottom. And you know why? Because whoever can race that bottom is going to get the biggest market share. No different than when it was Uber versus Lyft, right? And that causes for a lot of losses in the short term. But no, people just like, oh, it's just going to make trillions of dollars right off the bat. And I'm just like people don't even understand how Tesla's business model works. They don't understand anything about the company, and they're just buying it because it has a hype, it has a momentum. Same thing with Palantir. Like, it's just, like, if I go back 2 years ago, there was such a great community around many of these stocks, right? And it was like the most loyal, like most high-level understanding individuals. But when you get a blow off top, you have a lot of people start to come into these sorts of assets and stocks that don't really know what's going on. They're just in it because the hype. And then, they can hear a talking point from me or from whoever else and like run with that talking point, right? And it's like, geez, like they don't really actually know what's going on here. And so that's what happens. And all of a sudden, the sentiment can change very, very quickly, right? To all of a sudden, like, one little thing happens and all of a sudden, woo-wee, right? So let's speak about what happened here today, and will this continue past this week, right? So here's what happened. Jerome Powell came out, and obviously he's the Fed president. He's not the only person at the Fed, but he's the big dog that has to get up there with the microphone and talk and whatnot, right? So Fed cuts by a quarter point indicates fewer reductions ahead. The Federal Open Market Committee cut its overnight borrowing rate to a target range of 4.25 to 4.5, back to a level it was in December 2022. Quote, today was a closer call, but we decided it was the right call. When Jerome Powell said that comment right there, I was like, oh, down we go, baby. Because the market was red at that time, but it wasn't like that red. The moment I heard him say that, I was like, oh, watch out. And the reason being is by him saying closer call. That's what freaked everybody out. And I'm like, and then sure enough, next 30 minutes, it was just an onslaught of selling. Because, everybody's listening to this. The algos are picking up on every word choice. And that specific, when he said it was a closer call, ooh, boy, does that freak some people out. The Fed indicated that it probably would only lower twice more in 2025, according to the closely watched dot plot matrix of individual members' future rate expectations, right? And so a lot of people in the market were thinking 4 rate cuts in 2025, now talking about potentially 2, right? And this freaks the market out in a massive way. Now, the Fed cutting interest rates is not always a good thing, and it's something important we got to understand here. The Fed cutting interest rates sometimes can be very bad news because that means the economy is getting devastated, you're going through a big recession, things like that. No different than the Fed staying at, let's call it a little more elevated interest rates. So let's say Fed funds rate in the 3s or even the 4s. Sometimes that doesn't necessarily mean that you have high inflation. It just means you have a really, really strong economy. If you do have a really, truly, really strong economy, generally CPI is probably going to run high 2s to in the 3s, which means you likely need a Fed funds rate somewhere around 3, right? Especially if you have unemployment rate at 4% or so, especially if you have it under 4%. So that's important to understand, but the market's very in this kind of like this fascination with we want rate cuts. The market wants rates at 0, right? They want Fed funds rate at 0. They want unemployment at 3%. They want all perfection, right? And that's a dangerous part when you start pricing in perfection in the market and when the P's start to get elevated. When the P's start to get elevated, right, what happens? Well, you priced in a lot of dang perfection if the P's are extremely elevated. And you need so much to go right. And so when then something breaks, it could be employment market breaks. It can be inflation is too high. It can be the Fed says, we're not going to lower as much as you guys think we're going to lower. As soon as you get something like that, sentiment changes quickly, right? And all of a sudden people freak out in quite a substantial way. Now that leads us to Trump. Obviously, Trump's getting in office in a few weeks from now? Now, my guess is, so Jerome Powell's supposed to stay on till, if I recall, January 2026. So a year, for Trump's presidency. My guess is Trump is going to try to force the Fed and Jerome Powell to lower rates substantially. And I think he's going to, it's probably the best political move for him to really get out there aggressively in that first 6 months of him being president to take the stance of Biden left me a mess of an economy. You guys need to get lowering interest rates. And so I think he's going to likely take that approach. So this whole Fed's only going to lower two things. Now, the Fed should not technically be influenced by what Trump says. However, that's not really the way it works. And I watched Trump push his weight around back in 2018 with the Fed, right? And the Fed made some changes, right? And the Fed can look at this data. Like, the thing is with data, it's still at the end of the day, it ends up being open for interpretation. So you could look at unemployment rate being 4.3%, let's say, and you're like, that's a low rate. But you could also take the stance of like, well, it keeps going up and up and up, so we need a lower, right? Or you could easily take the stance of, well, it's 4.3, it's still really low, so we don't need a lower, right? This is where data starts to become open to your opinion. It's not as simple as just this says this. No, it's more like, well, this is how I feel about it, right? No different than buying a stock. Just because a stock's at a certain PE doesn't mean that stock, you got to go buy it or you got to go sell it. That's not how it works. You got to factor in future growth rates, business model, what space they're in, all those sorts of things, right? So that's going to be fascinating to see how this works out. But I saw this, while I was working here, this popped up on the screen. Russell 2000 posts worst daily loss since June 2020. That's what I call markets getting caught with their pants down. The market got caught with its pants down here today, and they were not expecting this at all. And all of a sudden it came out of nowhere, and they're like, oh my gosh. Yeah, the market's been too complacent. The market's been too complacent, right? Now, how much longer will this last? Well, here's the deal. If you're gonna sell, right, and you're on Wall Street, you're a fund manager, pretty much all the big fund managers and much of Wall Street takes off these 2 weeks. Christmas week and New Year's week, right? They take a 2-week vacation there. Trading volumes are very low usually that time, and many times the market just kind of drifts higher during that particular time period. Wall Street's just asleep at the wheel, and the market's just asleep at the wheel. There's not a ton of selling pressure usually on in the market. And there's just usually, you're always going to have a certain amount of buying pressure that comes in the market from 401ks and all that stuff, right? So usually those are kind of 2 good weeks. So if you're about to go on vacation here and you want to position out of the market for when you come back, which would be this week here, which is the week of the 6th, right? January 6th. Well, what you're going to go ahead and do is you're going to sell over the next 2 days, right? So what I'm telling you here is don't be surprised if many stocks see more selling pressure over this next 2 days. Because if you want to position out, you've got to get it done now because you're about to go on vacation, right? And I'm telling you, these Wall Streeters, a lot of them are a lazy bunch, man. They're a lazy bunch. They don't want to be trading on their holiday. No, they don't want to be worrying about selling $100 million of blah, blah, blah stock while they're skiing in Aspen. Oh, no way. We're not worried about that. We got skiing to do, baby. Okay, so moral of the story is 19th and 20th. If they're gonna sell, they better sell now, right? Now that leads us into what happens after New Year's, right? Well, I would say now the first 3 weeks, really the first 2 weeks of January when Wall Street gets back, that's a complete wild card. I would say all bets are off on what they do. Maybe they all of a sudden come back and then they just put relentless selling pressure on the market, right? They're like, oh, the Fed's hardly lowering. Like, what's going to happen here with earnings? Sell. I think it's a complete wild card. Your guess is as good as mine. That's a complete coin flip from there. Now, after that, starting on the 19th, we're, the week of the 20th here, we're going to start getting a ton of earnings. It's going to be an earnings onslaught all the way into February, right? And so if earnings come out and earnings are good, the market will start to bounce back. Right? Even if let's say they sell heavy over the next 2 days, then we just kind of drift a little bit higher over the next 2 weeks, right, for vacation time. And then they come back and they just hit that sell button hard and they're just selling left and right for those 2 weeks, right? At the end of the day, earnings could save us if earnings are good. If earnings are good and guidance is good, market will just start drifting back higher, right? And they'll buy back the same stocks they just sold. Now, if earnings are bad, which isn't very likely, like if you really go through all the top tier companies, if you go through NVIDIA's, what is NVIDIA's earnings going to be? They're going to be very good. Guidance is going to be good. Meta, earnings is going to be very good. Guidance is going to be good. These are all the stocks that matter the most to the indexes, right? Into the market in general. Google's going to be good. Apple, nothing to be excited about there, but they somehow always get it done, right? Tesla, wild card there, but Tesla doesn't really run off fundamentals. We know that, right? It's running off of just kind of a lot of excitement and things about robotaxi network. So the conference call is honestly more important than the numbers for Tesla. So then we got Microsoft. Microsoft numbers are going to be good. Guidance is going to be good. Amazon numbers are going to be very good. Amazon guidance is going to be very good. So you go through all the big dogs, and it's like, to bank on those earnings being bad is near impossible. So therefore, I think it's hard to get this market down on a multi-month basis in any substantial way. I think it's easy to get the market down over the next 2 days, and I think it's easy to get the market down if Wall Street wants to come back from vacation and just sell, right? Because the Fed's not doing what they want them to do. I don't think that's hard to imagine at all, right? But earnings will be what starts to dictate the market at the end of January and then certainly going into February. Now, that leads us to Tom Lee. Tom Lee's 2025 prediction, I'm not sure if you guys got to see it. I ran it, I think I talked about it either on a reaction channel video recently or here on the main channel, right? Tom Lee's prediction for what's going to happen with the stock market in 2025 is essentially the first several months of 2025, the market's going to soar. First several months of 2025. Then kind of mid-year, somewhere around mid-year, we start going through an epic correction. Borderline, I would call it small crash in the stock market, right? Because he's talking about S&P goes to like 7,000 and then goes all the way down to that 5,000 range. That would be, a very epic correction or a small crash in the market if that happens, right? And then basically the market comes back around the fourth quarter of the year and goes back to kind of mid 6,000 range. So that's Tom Lee's call. And hearing that, it kind of makes me think that sounds like the most logical probability, right? Like Trump gets in office, a lot of optimism around the economy, around the market, right? Earnings coming good at the beginning of the year. Guidance is good. We probably get some really good guidance for all of fiscal 2025 from a lot of these companies, and boom. And so and then, the euphoria starts to fade. People start to kind of, that sell in May and go away phenomenon happens. You kind of get weakness in the summer. Like you kind of run through the scenario and you're like, honestly, that makes a lot of sense. The issue is a lot of times what makes sense in the stock market is not what happens. Time and time again, what you think is going to happen in the stock market is not the way it happens. So the more I got thinking about this, the more I'm like, maybe we're going to get an opposite phenomenon where we dump in the beginning of the year, right? And then we come back in the back half of the year. I'm like, maybe that's a potential. Micron's earnings came out after the bell. They had a very weak guidance. Now, Micron, for those of you guys that don't know, they're a massive memory chip company. And whenever Micron has a weak guidance, it definitely worries the market. People say, people aren't buying chips. People aren't buying electronics. Not good. Not good for the economy. Not good for the tech sector. When people are feeling good about tech, they're feeling good about Micron usually. When people are feeling bad, they usually don't want Micron, right? Very commodity-related business model. Now, my opinion is since Micron's going to be down big here with a weak guidance, that's going to make more fear into the QQQ likely over the next 2 days. I would say high probability because people are going to take this, extrapolate it out, and kind of freak out over this, right? Additionally, after the bell, we got one of the biggest home builders in all of the United States of America, Lennar, reported a double miss. They missed on revenue, they missed on EPS, and I was listening to what the CEO had to say, and as I was listening to that, once again, I had it on the background just on CNBC, they were talking about what the CEO said. I'm listening to this, and I'm like, dang, he sounds bearish. Like, it didn't sound good for the housing market. So, that's trouble. That's trouble, and that's going to lead to more fear overall. This is more fear in regards to NASDAQ. This is more fear in regards to the housing-related plays, cyclical-type plays. Whew. And then you see this happen here, right? Because of what happened with the Fed here today and talking about lowering less than expected, mortgage rates just spiked to back over 7. It's back over 7. Oh, boy, I would not want to sell a house over the next few months. Get ready for price cuts. Get ready for price reductions. I've already been seeing it. I've been talking to you guys about real estate market, especially on the higher end. It's not good. It's not good. It's bad. It's bad. I know our H stock keeps going up, but I'm like, the high-end housing market is not in a healthy place right now. It's not good. And I'm like, these prices are likely going to come down a lot more. And you talk about mortgage rates over 7, you got to understand, like, the far majority of people that buy homes buy them on what? A mortgage. It's not like people just have $500,000 laying around to go buy a $500,000 house. It's not the way it works, right? And so, though, like, the only people that really buy cash are the people that usually, like, have so much money that it's just ridiculous how much money they have, right? Like, the people that have, 8-figure net worths, 9-figure net worths, 10-figure net worths. Like those people buy homes cash, but for the most part, people don't buy homes cash unless maybe it's like a retiree, right? Who's maybe got a few $1,000,000 to their name, 2 or 3 mil. They worked a long career, and then they go buy a house in Sun City, Arizona, right? And they spend $500,000 on that, and they don't want a mortgage, and so they just buy it outright. Like outside of that scenario, which is a very small pool of buyers, most people need a mortgage. And so when you talk about 7% plus, it just kills the housing market, man. It completely devastates it. And this is not good for the home builders. This is not good for the construction industry. I can tell you that. And I can tell you the one thing that always scares me is when home builders' business is really weak, it worries me because I just understand there's so many jobs that are created from the building of a home, man. I always tell you guys, if you watch my channel for years and years, what I always tell you is the best thing that ever happens to the U.S. economy. Best thing that ever happens to the U.S. economy is a new home is built. Best thing, bar none, in my opinion. The amount, and if you ever grew up in a city like I did, Phoenix, Arizona, where it's just like, was always just massive construction, right? Living out here in Vegas, you see it firsthand. You like really get it, because you see how many workers are on these job sites and how many workers do a project, some sort of project on a house, and how many companies make money off that. It's incredible what it does to the economy, like absolutely incredible. But if you kill that, you kill the economy. That's one of the things that happened in the great financial crisis. How the housing market got killed, and you devastated the economy to the highest unemployment rates we had seen, in many, many decades. That's what ends up happening. And so this is a very serious situation. If we want to talk about anything that could potentially scare me more over the next 1 to 2 years, this is it. I'm telling you, if these home builders actually start seeing their backlogs decrease rapidly, we could be in trouble with the economy. We could be in trouble with a recession, a real recession. And so you just got to be aware of that, man. I think this is pretty serious stuff. And so it's not something you could freak out about now, but it's something you absolutely got to keep an eye on. And I'm going to keep an eye on it because I'm like, ooh, if this goes south, man, then we're talking about much bigger problems. Now, obviously that bodes very well for my Toll Brothers put options, right? These are now at a 71% gain. These could hit, honestly, 100% plus gain in the next 48 hours. We'll see what shakes out there with those Lennar earnings and kind of the aftermath there. But I'm like, if Wall Street wants to start piling out of these babies, and you got to understand, now that Toll keeps going down, you could actually get tax loss harvesting on Toll here at the end of the year, which wasn't thought as even a realistic possibility like a month or two ago. Because Toll was just reaching new all-time high after new all-time high. The stock was 150s plus, right? Now all of a sudden you're talking about people potentially tax loss harvest on this baby. That just adds a whole new level of selling pressure. So, we'll see what happens here, but I wouldn't be surprised if next thing you know, these are sitting on 100% gain over the next 48 hours. With that being said, if Toll keeps going down, I don't think I'm going to hold these 6 contracts into next year. If it keeps truly going down the way it is, just for the mere fact that I'll just have made so much, it won't make sense to continue to take that risk, especially given theta decay over time, right? Obviously, options decay as the time ticks on, you get closer and closer. We'll see. But I'm telling you, if these babies just keep tanking, I might look to just cash them before we even get to the end of this year. Now, that being said, I just cashed 5 of the contracts yesterday. Oh my gosh. I spoke about it on the reaction channel, right? And I made great gains on that. But I want my other 5 contracts back, man. I had 11 contracts. Now I got 6. I'm like, can I get the other 5 contracts back? There's an urban legend. I don't know if you guys know this or not, right? And it's I've seen this before. You usually want to wait a few days or weeks after Jeremy buys or sells to buy or sell. And it's an urban legend that I've heard for years. And it's true. I think it's true because I can never time it out perfect in terms of, selling at the top or buying at the bottom. It never works out like that. I just got a poker table delivered in my house here today. Very excited about that. And I got a great, poker is a very magical game for me in terms of my respect levels for the game. I hardly get to play it, but when I do, I just love the game. It's such a great game, in my opinion, right? I think if I was to tell stock market investors to play a game, I think poker is one of the best games to learn, right? But when you play poker, you learn. You can't assume you're going to win every hand. That's not the way it works, right? So when I sell something that I made a lot of money on and I don't sell at the top, I'm okay with that. I'm never going to sell it at the top. It's unrealistic. Like, I'm not going to win every hand, right? Additionally, when you learn to play poker on a high level, you have to take all possibilities into account. And then you have to run math in your head and do a lot of math on if it makes sense to make that bet or not. If you try to play poker on a high level with just your feelings of like, I think I'm going to get good cards, so I'm going to stay out there in this hand, or I folded last time when I had this, king jack, and I ended up getting a full house on that. So you know what? I'm going to stay in this time. That's a flawed thought process, right? And you learn that in poker, and you'll have every dollar taken from you over time playing poker from any good players because they're actually doing math, right? And so that's what I do. I do math. I take all possibilities into account, and I make my moves. And if that means I buy a stock and it keeps going down after I buy it, it's fine with me. Like, if I'm buying a stock, it's usually because it's a steal deal. If it becomes even more of a steal deal, great, right? And every once in a while, I'll be wrong in general. Fine. That's the cost of doing business. It's the cost of doing business, right? And I got to take and if I get an opportunity to sell some put options at a very attractive price, I'm going to do that. I'm going to do that. Even if I could make a little bit more, there's more juice to squeeze. Like, it is what it is, right? Like, I'm okay. My returns are unbelievable, and 5-year returns are ridiculous. So I'm like, what I do works. Now, I'll be buying any weakness we get over this next 48 hours. And but the other thing you got to remember with me, I buy every single week. So market goes down, I buy. Market goes up, I buy. Market's stagnant, I buy, right? I buy every single week. Now, there are certain time periods that I buy heavier. Let's say S&P 500 goes down 20% the next 2 months. You better get ready. I'm going to be releasing a lot of videos. I just spent $40,000 on this stock. I just spent $50,000 on this stock. I just spent $100,000 in this stock. Oh man, it's going to be an onslaught, okay? If the market goes down significantly, if there's better and better deals in the market, I deploy money heavier. But with that being said, I buy every single week. So I don't take on that stress of trying to perfectly time the market and those sorts of things, because that's a fool's game. But I did buy 4 stocks here today. Let's speak about those 4 stocks. I bought AMD stock. And this should come as no surprise. Now, I knew I should have waited till buy like in the last minute or two of trading, because I knew that baby was going to keep going down. So I ended up buying about 30 minutes or so before the market closed. I got 123. I could have got it at 121 if I had waited till just before the market closed. But this is once again my thought process. I'm like, I think it's probably going to keep going down. It's probably going to be 121, or I thought 122, 121, end of trading day, right? I got to pay 123. But my thought process also, 123 is a steal deal. So do I want to get greedy and try to wait for the 121 and it doesn't happen, and then it goes to 125, and then I start thinking, well, maybe I'll buy it tomorrow. Like, at the end of the day, like, when I look back at AMD 2-3 years from now, I don't think it's going to even matter whether I bought it at 123 or 121 or 119 or 127. Like, it's all going to be irrelevant. Like, if AMD is going to where I think it's going over the next few years, which is $300 to $500 a share, we won't even remember. I won't even remember, like, oh, remember I got it at 121 versus 120. I won't even remember this. Are you freaking kidding me? No. All I remember is, I remember I bought a lot of shares at the end of 2024 going into 2025 for AMD stock at $100, and, it's at a certain price, and I'm going to be likely a very happy camper. Or maybe I'm not. Maybe AMD just fails over the next many years and stock's $50, and I'm like, oh, dang, man, stupid. I don't know why I bought it. Like, I'll take that risk. Another stock I bought here today, Cheesecake Factory. Cake, paid $48.26 for those shares, bought another 50 shares of Cheesecake Factory. I'll gladly buy as many shares as I can of Cake. Another stock I'm buying as many shares as I can here, Nike. Bought more Nike shares here, $77. I'll probably be buying more Nike shares on Friday. Probably be buying more Nike shares a week after. Probably be buying more Nike shares a week after. Like, give me more and more Nike. It's never enough. Celsius, I bought another 30 shares here, $26.62. I'm likely almost done buying Celsius. I might buy some more shares in January of Celsius and maybe a little bit more at the end of this month. But my position's getting close to a point in time with Celsius and Monster where I'm happy with where I'm at in the public account. So, those ones are probably almost done in terms of me buying more shares, right? Now, if you want more thoughts about AMD, I don't know if you guys got the chance to see this one, buy AMD stock and don't stop buying. I did that video 8 days ago, and I talk about how, like, the next several months in AMD, buy every share you can. I think it's an incredible risk-reward opportunity here over this next, I would say 1 to 3 months. And so, yeah, if you want to check out my more in-depth thoughts about AMD, check that video out. That's kind of a 32-minute beast there. And then if you want to hear me talk more about Nike, Celsius, Cheesecake, a lot of those sorts of stocks. I believe I featured all those stocks on this video here, 5 stocks I'm buying now, December 2024 edition. So you can definitely check out that and see some more thoughts there. Now, I love to show this graphic when the market gets a little more shaky, right? Because it kind of just brings people back to reality, I think, a little bit, right? And specifically, points 1 through 3 here in these last two. Build a portfolio to be proud of years from now. So when you're buying out there over this next several weeks and next several months, like, think about it in terms of, like, am I going to be proud of the stock I bought 3 years from now or not, right? Are they still going to be around? Like, it's a high probability. Where's our revenues, net income is going to be at, right? Am I going to be proud of the business model they have there? 2, stay diversified as your alpha long term. Make sure you stay diversified. You always see me buying a whole host of stocks. I'll own 20, 25 stocks at a given time, right? I don't ever put all my eggs in one basket and hope it works out. That's not how you play this game on a high level. Third thing is growth, value, dividends, hedge, cash. All those are important, right? All those are important. You got to keep cash levels around. And when the market's going more and more risk on, you go more and more cash, right? When the market's going more and more risk on, you got to put on some hedges, especially toward the end of a year, right? And then you got to always be buying growth, value, and dividend stocks. They all represent phenomenal opportunities. Growth stocks, especially when the market gets tough, because people flood out of growth stocks, as you saw here today. 8% down for Tesla, right? No one wants a growth stock when the market's tanking. That's just the bottom line with that. Value and dividend stocks come in clutch when the market's tanking, because those ones usually don't go down very much. They actually preserve your capital usually very well, especially if they're great companies. Additionally, they pay you off dividends that then you can reinvest into the market and buy probably great growth stocks that are tanking at that particular time, right? So I'm telling you, those value and divs come in clutch, very, very clutch. Buy the dip, never trip. Always take advantage of these opportunities. I know whenever you get the market to go down, like let's say the market goes down 20%, S&P 500 goes down 20% in the next 3 months. It's going to be the end of the world. Everybody's going to be talking about it's the end. The market's never coming back. Everybody's going to be, S&P 500 is going to go down another 50%, blah, blah, blah. Okay, percent down another 50%. I don't care. Give me, always remember, this is always one big game of they're trying to get your damn shares. Always remember that they're trying to get your shares, okay? And there's 2 ways you can play this game. You're either going to let them get your shares during a crash for cheap prices, or you're going to be the one that's acquiring the shares during a crash for cheap prices. It's one of the 2. So I'll let them have my shares. I let them have my shares when the market's skyrocketing, when my stocks are getting to, pretty outlandish valuations. In those time periods, they can have my shares. There you go. I'll let you have them. But when we're going through drama, when we're going through a major correction, the market crashes, anything like that, you better believe you're not touching my shares, but I'm going to be buying up all the ones that are selling during that particular time. And that's the big name of the game. And always remember, the most money is made during correction crash periods. How's it made? One is, if you have hedges on the market, they appreciate so rapidly. Look at the Toll Brothers, for instance. All of a sudden, that's a fairly new put position, up 71%, in snap of fingers. Are you kidding me? There's a lot of money to be made from the downside if you have hedges on during a crashing market. And additionally, the most money is made from the long side during a crash. You know why? Because you're buying shares at probably stupid prices, right? That then a few years from now are going to appreciate so rapidly that you're going to make 4x, 5x, 10x times your money. That you're like, geez, that was easy. And it doesn't always have to be in crazy stocks. Look at Meta. Meta's a stock I was buying late 2022. I have shares I bought in the public account at $88.94. $88.94. Somebody sold me shares. That's where the most money's made, right? Look at Tesla. During the crash of 2022, at the beginning of 2023, the stock was $101. I bought shares of Tesla at $103 at the beginning of 2023. Are you kidding me? Okay. You want to sell me Tesla at 100? I'll take that Tesla at 100, right? And now people are trampling over themselves to buy Tesla at 400 plus. It's just fascinating. But that's the name of the market game, right? When the market's going down, buy every share in sight. Add as much ownership as possible. When the market's getting to silly valuations, let them have your shares. They can have a portion of them. Don't give them all. Never give them away at all. If you own great companies, never give away all your shares. That's what you see me with Tesla. I've made so much profit on Tesla. At this point, I don't even know how much. It's so much, right? And I sold off the far majority of my Tesla shares because it's gotten a pretty crazy valuation. But you notice I never sell everything. I always keep a good amount around. I got 1,000 shares in the public account. I got other shares in other portfolios as well, right? I never sell it all. Because I'm like, what if Tesla is a $10 trillion company someday, right? I'm going to hold through that. Elon Musk is very special. Like maybe he could be the first to have a $10 trillion company, right? So I never let him have everything. But, you know, if you want to give me crazy pricing on some of my stocks, go ahead. You can have them. Have fun. Best of luck, right? Everybody wins. So that's the name of the game, guys. Buy the dip, never trip, okay? Appreciate you guys joining me as always. Pin comment down there if you're looking to access my private stock group. You want to apply to join my private stock group, get everything that I know up here. Download it to your brain right there, okay? I could do that. That's in all my course curriculums. I teach you everything I got up here. In those course curriculums, you also get access to exclusive weekly videos from me, Discord chat, all that fun stuff, okay? All right, guys, much love and have a great day.